What up, everybody? Back again with another video. Um, so just as a spinoff to our previous video, candlesticks, understanding candlesticks. Now we're going to get into candlestick patterns, right? So these candlestick patterns can come in a single candlestick, double candlesticks, triple candlesticks, four candlestick. You know what I'm saying? Different combinations. Um, and it just the difference in the way that these candlesticks are formed from price, right? So the different candles, um, like bullish engulfings, bearish engulfings, you know what I'm saying, shooting stars, some of these main candlestick patterns we're going to go over here in a second. There's hundreds, I'm pretty sure, candlestick patterns, right? So there's always the opportunity to go out and learn more candlestick patterns. Besides the ones we're going to go over here, but we're going to go over a few main ones. You know, some of them indicate a reversal from a bearish pattern to a bullish pattern. Some of them indicate a reversal from a bullish pattern to a bearish pattern. You know what I'm saying? And just the different ways that price is formed, right? So we're gonna go over these. It'll be fun. Always telling me no. All right, let's see. All right, so our first pattern on the list is going to be a hammer, right? So a hammer, you're typically going to see a hammer. It occurs on the end tail of a downtrend, right? So probably in levels of support, right? Or when the downtrend is just losing exhaustion, right? When it's just exhausted itself out, you'll see a hammer possibly printing. What this is like you'll see a small to no shadow, upper shadow. You'll see like the real body would be real small, and the lower wick of that candle would be like 2 to 3 times the size of the body, right? So we just 2, 3 times the body, right? We see the wick of this super long, right? The body's super small, no upper shadow. When we see after price prints this hammer, you see price continue to boom, 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 boom. You know what I'm saying? Move to the upside, right? So this would be a bullish reversal pattern, right? Next, we have our hanging. Oh, there we go. All right. Next, we got our inverted hammer, right? So an inverted hammer is essentially a hammer upside down, like just bloop, bloop, right? So instead of the shadow being to the downside, right, you'll see a small real body saying, and then you'll see a long upper wick shadow, right? 2, 3 times the size of the real body, right? Still indicating a bullish trend to precede it. Now, next we have our hanging man, right? So this is a trend that reverses from an uptrend, right? So we see price initially an uptrend, we see the formation of this hanging man, and we see price start to reverse down to the downside, right? So a hanging man is pretty much the bearish counterpart of a hammer. So you're still gonna have that small real body, right? And with these, sometimes they can be, I know this is indicating it's a bearish candle, but sometimes that candle can even be bullish. You know what I'm saying? That is a possibility, and you'll see price still had that same type of Thor hammer shape, right? So small real body, long lower wick, right? And then we'll start to see price reverse after you see these at the top, usually at resistance zones. Now we have our shooting star, which is, you know how the hammer had the inverted hammer, the hanging man has the shooting star, right? That's his little whoop, right? So this one, you'll see a small real body, you know, lower to no lower shadow, and then you'll see a really tall upper shadow, right? Indicating that price really tried to extend itself to the upside, but price failed to do so, closing near its opening price, right? All right. So now we're getting into, that was a single candle formation. Now we're gonna take a look at a triple candle formation, right? So these type of formations take 3 different candles, right? So the first one we're gonna look at is gonna be a morning star pattern. So this morning star pattern is gonna be a big, right? You'll see preceding it is going to be a downtrend, right? As you precede this downtrend, you'll see a typical medium to large bearish candle, and preceding that to be a doji, right? Or a spinning top, which is just a small candle with a small real body and just wicks to the upside downside, you know, but pretty much a body, small body candle that is not necessarily a doji, but in a morning star you can see spinning top or a doji candle Preceding that doji, you'll see a strong bullish candle to the upside, right? And this is what we call a Morningstar pattern. Usually what you see preceding these patterns is you'll see price shoot back to the upside, especially when you're seeing these patterns on higher time frames, like the 4 hour, the daily, weekly, things like that, right? That's when these prices really tend to show you. So past the morning star, now we have our evening star, right? So this is what you'll see typically on preceding a bullish trend, right? So you'll see price previously moving to the upside, maybe read a resistance zone here. And now we're seeing the formation of this evening star pattern, which is a strong bullish candle, doji candle, spinning top type of candle. And then preceding that is going to be a strong bearish candle, right? Either greater than a bullish candle, or, you know, saying strong intent, and then you'll start to see price, you know, follow out through there. Now that we've been talking about like this little doji, I know you've been hearing like, what is doji? Now we're going to talk about a doji, right? So a typical doji is an indecision candle, right? Just showing you, indicating that like price has tried to go to the upside, has tried to go to the downside, but it doesn't really have a direction right now, right? It's not really moving. It's just in this same area that it generally opened in, it's closing in, right? That's the whole point. And with these dojis, there are more than one type of doji. I think there's like 5. Excuse me. I think there's like 5 different type of doji candles. But this one in particular is like the main one you'll see, and the main one I just wanted to go over today. Now we have our 2 candle type formation, right? And this is going to be a bearish engulfing, right? So bearish engulfing is going to be a formation where you see a strong bearish candle completely engulfing, right? So if we look at this spinning top, we look at this preceding candle, we see this candle is completely engulfed within this bearish engulfing, right? As well as right here, right? Because oftentimes you'll see prices still open up at the high, like this, the high, it'll open up here. So you'll see they'll oftentimes have the equal level there, but you'll see price to either have a wick to the upside and this strong impact of completely engulfing this entire candle, right? Same with here, right? We see this candle was completely engulfed, right? So that's going to be our bearish engulfing. And seeing these, you can see price tends to have a trend to boom, keep rolling over, boom, keep rolling over, boom, keep rolling over, right? So 3 white soldiers, right? So 3 white soldiers is really just a gradually increasing pattern, right? You'll see it's 3 candlesticks. You'll see one of them be small, and then you may just think of it as like small, medium, large, right? That's kind of how you'll see 3 white soldiers. That nice gradual increase in price, right? And as you see that, you'll see price typically break out to the upside, but you also want to always be wary of candlestick patterns. You know, candlesticks, formation, chart patterns, everything. Nothing is absolute. You know what I'm saying? I always want to make sure I make that clear at some point in time. Like nothing is absolute, right? Because no 2 scenarios are ever the same, right? There's not the same. The traders that traded this pattern are not going to be the same traders trading whatever pattern that you see when you trade your 3 white soldiers, or your bearish engulfing, or bullish engulfing, or morning star, evening star, hammer, inverted hammer, hanging man. You know what I'm saying? Opposite to that is your 3 black crows, right? So you'll see the gradually increasing, right? Small, medium, large, boom, roll over. We see price continues to roll over to the downside, right? So just 3 gradually increasing bearish candles, right? Double bottom, and I think, there we go. I knew I was missing something. Bullish engulfing, right? I don't know why it skips these 2 at a time sometimes. Bullish engulfing. So our bullish engulfing is going to be the opposite of our bearish engulfing, right? So you'll see price completely engulf its preceding bearish candle, right? We'll see boom, boom, bullish candle, real body. You really want to see the whole of this candle within the real body of this candle, and really want to see it cover it past what it needs to, right? That gives you that nice strong of a bullish engulfing, right? So now that we got that. All right. And now we're just going to talk about just to give us a little insight on our next follow-up video, we're going to talk about a chart pattern, right? So just as these candlesticks can make a pattern, a group of candlesticks right over a range of time can also form patterns. Like now we'll see, this is what we'll call a double bottom pattern, right? You'll typically see price make like this W type formation, come into a price area where it rejects once, hits resistance, rejects twice, boom, double bottom. We'll see price continue to the upside, right? Little things like that. And opposite to that, you have the double top, right? So you'll see price sort of make like this M formation where you see price come up, right? Gets rejected at a certain price area, comes down, creates this neckline, comes back up, gets rejected again, boom, follows through, boom, breaks the neckline, retests the neckline, boom, follows through. We got our rollover in price, right? So with that, I think that ends this presentation. I want everybody to head over to the beginner's course, right? Get these, and this is a pretty detailed one, right? So I want everyone to really get an understanding for at least these main chart patterns, these main formations, because these are a lot of the main ones you, in my personal opinion, I feel like you will see. And once you get just that first grasp of knowledge and it starts clicking, which you start seeing like how these can impact your trading, you're going to go out and you're going to look at the super wide range of different candlestick patterns, right? If you're in the Discord, you have somewhere within the helpful info, there's a picture of just a chart of different candlesticks. And it's as simple as Googling, like simply going to Google, Googling trading candlestick images, right? So we see this wide range, right? Hammer, bullish engulfing, piercing lines, inverted hammer, morning star, right? We see these wide range of doji, these wide range of patterns, right? Bullish, bearish, neutral, reversals, trend continuation patterns, like all of these are assets and are the perfect thing you need to increase your trading, to help you on your trading, to help you better your trading, right? So I want everybody to take that, grow with that, and see you on the next episode.